Okay, so there we are. We're in progress. So good morning, everybody. Welcome to the Kushner Report. This is with Fordham Road Collaborative. As you know, I'm Robert Brancatelli, and there's Dennis Kushner. So really happy to have you join us. Dennis is going to be talking about inflation, biotechnology, and retail. And so we're happy to be able to bring this to you. We are recording this. We're going to be putting the presentation solely onto the website rather than the presentation and the Q&A. So it'll just be the presentation if you need to get a copy of that. As I said, as you know, we'll hold every question until the end for Q&A. And you can also go to fordhamroad.net to be able to get copies of the recordings. Next, actually, I should point out the Art of Dental Finance and Management. If you're interested in that, you can get access to that. Dennis did this back in April with Ida Bailey, CPA firm. We will be holding our final Kushner report next month in July. We're going to take August off to regroup, look at refining some things that we're doing with the Kushner report, and we'll be back in September. So it'll be July 29th will be our last one, and then we'll pick it back up on September 23rd. And I want to point out too that in July Dennis will be talking about technology, artificial intelligence, and if the second quarter report is out on VC investments, we'll also be talking about that. So thank you very much. Nice to have you. And I think, Dennis, take it away.
Okay, well, good morning, everyone, and welcome to the Kushner Report for June 2021. As Robert mentioned, at the conclusion of the program today, we'll have an opportunity to have Q&A, and hopefully you'll be able to participate with your questions. And we'll have a special discussion with Bruce Conklin later today when we get to the end of the program. So
Dennis, thank you. Excuse me, Dennis, thank you for mentioning that. I forgot. Bruce, it's getting back to basics with Bruce. So thanks very much.
Okay, we're ready to go. Okay, we're ready. We'll go over the agenda. And okay, so today's agenda, we're going to take a look at the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, other significant economic news. And then I said, what's ahead in 2021? So we want to give you an update on inflation, which is something that's a big concern here in this country. Biotechnology outlook for the rest of the year, and also the retail outlook for the rest of the year. Okay, so what we're going to look at this morning, we're going to take a look at gross domestic product, and we're going to take a look at inflation, unemployment at the federal level, unemployment at the California level, and also the price per barrel of oil. Okay, so if we look at the global GDP, it remains the same as it has been over the last couple of months. They're projecting about 6.1% growth for the full year. And then we're looking at 2022, we're looking at down a little bit to 4%, but it's much better than we've seen in prior years. If we look at the US GDP, it's projected now to go out about 7.3%. This will be the highest since 1951. And there are some recent forecasts that are looking at 8%. And then we'll go down a little bit to 5.8%, but it's much higher than the 2.5 and 3% that we've seen in years. So the next 2 years, this year and next year, look strong economically. The biggest concern we have here is another change in inflation. So on an average rate here, we're looking at about 3.3%. Robert, can you put everybody on mute?
Yeah, that's what I'm checking that out now, Dennis.
Yeah,
if you wouldn't mind just muting yourselves, please.
Yeah.
Thank you.
So if you look at inflation, as I mentioned earlier, on average, they're talking about possibly going out the end of the year 3.3%. And that means that certain things will have to happen during the remaining 6 months of the year. I'll get into that a little bit later in my presentation. And then next year, inflation is looking like 2.7%. The unemployment in the United States across the board is looking at about 5.5% at the end of the year, and then 4.2% next year. So it's going to be a while before we get down to the threes that we saw previous to the pandemic. And then in the state of California, there's still projections around 6.8%, which is much higher than the national average, and then dropping down to 5.1%. But again, a lot of things can change between now and December. The price per barrel of oil, the range is $57 to $70 a barrel. Now, the one thing I'll make a comment here is that 2 days ago, the price of a barrel of oil was at $73.19. Okay, so we may revise the outlook on this. However, Iran has announced that they're going to be increasing production, and we're waiting to see what's going to happen with other producers around the world to see if they're going to increase oil. Problem we have right now is all the economies are starting to come back, and there's a judicious appetite for oil. So there's a demand for oil. You're going to see more planes flying and et cetera. So the demand is going to go up. So we're hoping that simultaneously here in the near future, we'll see production levels go up. Otherwise, we're going to have a problem. So that's kind of where we stand right now. And the stars represent changes from our last presentation. So let's take a look at the global economy. First of all, if we look at Canada, Canada reported their first quarter GDP fell short of consensus expectations. Even though it grew at 5.6%, they were targeting 6.8%, but their economy is now starting to come back. However, spending levels in the service area in their economy is still relatively quiet because a lot of areas are still shut down due to the pandemic. So we'll see how that goes going forward. And the Brazilian economy for Gary, Brazil reported GDP. It beat expectations by a wide margin for the first quarter. Their economy grew at 1.2% quarter over quarter and 1% year over year. Keep in mind, they have had serious economic problems over the past 3 years prior to the pandemic. But going forward, the economy should pick up steam as household support is getting in the form of cash handouts, as well as other types of fiscal policy is taking place. So we should see their economy pick up. The European Central Bank is holding policy steady across the board. Monetary policy is being watched very carefully with respect to interest rates. And they're doing the same thing as the United States. Are going to have a wait and see policy to see what takes place here. And then, of course, you've got a strong rebound in the United Kingdom. They've had 2 or 3 situations where pandemic came back, it got under control, it came back. But in April, they had a strong rebound is underway right now, with the government having made good progress in vaccinating the population against the COVID. And restrictions are starting to be lifted throughout the continent over there. So this is good news. And basically, they had a 2.3% increase in their GDP. So all these are good figures coming out from different parts of the world. Now let's take a look at the domestic economy. First of all, the UCLA forecast came out recently for the quarter, and economists believe that the 2021 economy will be the best since World War II. California is projected to recover faster as the nation's economy begins to take more heat and move forward in the right direction. You know, even with a slow return of leisure and hospitality sector in California, other sectors will improve significantly in the months ahead. California, we have a lot of people that work in leisure and hospitality. Those were the jobs that really got killed during the pandemic, and they're coming back, but they're coming back slowly. Despite the recovery, California will continue to see the exodus of population due why? To taxes and the high cost of housing, along with industries also leaving the state. So the improving economy will not reduce the threats of housing and the exodus of our residents. The University of Irvine had their forecast about a week ago, very optimistic. They believe the second quarter GDP will be around 10%. Keep in mind, we're in June right now, and June is the end of the second quarter. Hopefully we'll have some data when I have my presentation in July to give you some preliminary numbers about how the second quarter fared. And basically, they're looking at a full year. They're projecting 8% total growth for the year, which is higher than the other investors and the other economists in the United States. You know, here's the problem. Many economists believe there's too much stimulus, where government spending could range as much as 20 to 30% of GDP, and that's huge. So that's a real concern going forward. You know, commodity prices are rising at an alarming rate. Somewhere's around 60%, some of the items have gone up. If you look at what happened with the price of lumber, it's skyrocketed, thus hindering a lot of new building taking place around the country. Now, keep in mind, the lumber mills have been closed for a long time. They're beginning to open up, and then people are going back into the area of beginning to cut lumber now. And so hopefully we'll see this change going forward at some point in time. Prices should start coming down. A typical consumer spending cycle, you know, durable goods spending are up 28% over the pandemic level, while the service sector spending is still below the pandemic by 5%. And again, you're talking about people going on leisure trips, et cetera, travel, airplanes, et cetera. But 2/3 of the service sector has rebounded after being underwater for normally 4 to 5 years. We're starting to see things picking up pretty well. The biggest risk going forward is going to focus on labor shortages and the supply chains throughout the country. You've got people still getting an exorbitant amount of money for being unemployed and not wanting to go back to work. You've got a lot of jobs that are available, but there's skill set issues. So this is going to have to be worked out going forward. In the travel and tourism business, the industry is bouncing back as pent-up demand is moving forward, you know, while people have increased their savings from not traveling and spending money on restaurants. So, but however, leisure and international travel is still down substantially, ups and downs because of COVID. People coming in and not coming in. The sector is very profitable, but it'll take time to rebound. As you know, one of the cruise lines about a week ago, they were going to go out to sea, and they found out that some of the people at work on the ship tested positive for the virus, and therefore the ship was redocked, and then people had I guess, flew back home and will have to get their funds back. So we're still not out of the woods yet in that particular area. And again, vaccines have to be more available to other countries around the world, including the third world underdeveloped nations. So, you know, we talk about California's doom and gloom as the number one in the United States economy. You know, every state has suffered over the past several months economically. But keep in mind that California represents 14% of the nation's GDP. And we've increased our hiring process since April of this year by 1.3 million jobs. So we're moving in the right direction. The big key is that factory hiring jobs have increased here substantially. We represent 13% of the GDP over the past 5 years, which is roughly about $316 billion. So we've got a very strong manufacturing economy in the state of California. So now let's take a little bit of a look at what's happening. So first of all, something that's near and dear to everybody's heart is inflation. You know, the latest rise in inflation rate to 5.3% in May of 2021 is the highest since August of 2008. And this has been fueled by expectations that the Federal Reserve could raise rates and tighten monetary supply. Last week, the Federal Reserve met, and I'll talk a little bit about that later. The good news is the bad news is the market went down over 500 Friday, came back on Monday when they made some quantitative easing comments on the economy and inflation. So the real key here is economists are now using the phrase transitory inflation, which means temporary. On the other hand, we could see persistent inflation. Keep in mind, we still have a lot of supply chain issues around the country. The last take, there's a tremendous amount of maybe 10 to 15 or 20% of gasoline trucks are sitting idle because they can't find drivers. American Airlines has canceled hundreds of flights in the last week because they don't have enough pilots to fly the planes. So we've got supply chain problems all over. You go to Home Depot, there's certain products at Lowe's as well. They're back ordered for 5 or 6 months. So it's going to take time for this whole thing to get through the chain. The Federal Reserve has been willing to deal and accommodate with higher interest rates at this point, but the stance could change, with an unexpected pace of price increases based on the latest data. But they said they're going to hold rates for the time being, and we'll see where that goes in the months ahead, because people will be going back to work, a lot more money will be spent. You see more traffic on the roads. In recent times, as I said earlier, the Fed is willing to sit by and see what takes place. The position now changes in May. And again, we're looking at the Fed had a meeting last week, and they basically said they're going to hold rates same. They're going to continue to invest money in the securities and mortgage-backed documents. And they're going to continue to put money into the economy. So, but the Federal Reserve at some point in time later in the year may not have any choice but to raise rates. Now, the biggest concern is if they raise rates to somewheres around 1 point, that could cause the economy to change and maybe head towards a recession. So we're just going to have to wait and see here. The real key components here basically are unemployment and inflation. Those are the drivers and for the foreseeable future. So we're going to have to wait and see what happens here. And what's amazing is that in the month of April, consumer price index for used cars and trucks went up by 10%. That's the largest increase since 1953. And keep in mind the issues with the price of oil and related production levels, and of course, supply chain across all the sectors are clearly having an impact in the country and our productivity. However, most economists believe that interest rates will start going down. Not interest, but inflation rates will start going down as we go further into the year and we see supply chain starting to pick up. But at this point, it's kind of a wait and see. Now I'd like to take a look at one of my favorite places. It's called Biotech. We put up something here I want you to look at. A book came out early this year. It's called The Code Breaker. It came out in sometime in March or April. It's about Jennifer Doudna, who is a PhD professor at the University of California in Berkeley. She won the Pulitzer Prize for chemistry this year. And it's about DNA, and it's incredible. It's about genetic editing. And I highly recommend it. It's written by Walter Isaacson. You may remember that Walter Isaacson wrote Ben Franklin, biography of Steve Jobs and Albert Einstein. It's a great book to read. You don't have to be a doctor or a scientist, but it's really good. It'll give you some good insight. And it'll even talk later on as you get through the program, start looking at what's been happening with DNA and RNA as it relates to the area of DNA and also the pandemic. So first of all, one of the things is constant here is the world is continuing changing on a daily basis. The changes in every aspect of existence with new technological breakthroughs and advancements is knowledge every day. And one of the things we're seeing is that the industries are now facing many changes in the area of biotechnology with constant research, improvements, and scientific discoveries. What we're seeing now with research becoming more expansive, many scientists and field experts are discovering a lot of things and discover conditions that are inherited because of genetics. And the implications of these are healthcare can be more personalized and customized based upon human DNA. It's incredible what's taking place now with DNA. And of course, if you look at the life sciences and evolving, we're seeing that the nature of these discoveries are dependent about past and present learning. And the curve is moving up in an expeditious manner. The one thing is biotech is continuing to improve in the area of developing of drug research, which is critical for our country. We're also seeing that advancements in biotech, many researchers now can also look at the different aspects of science, looking at different things about precision, such as precision surgery, immuno, and genetics, and using a lot of things to improve the delivery of services to our patients throughout the country and hopefully throughout the world. And of course, there's an increase in digital assessment, diagnosis, and treatment of patients. So that thing is taking place as we speak. And there are physicians and healthcare practitioners all across the world that are using online processes more rigorously now than we've ever seen, including before the pandemic. The real concern we have is there are more laws being passed, regulations and protocols to drive down the price of biotech products produced in pharmaceuticals and laboratories. That's the thing that we've got to really focus on, the cost of this, so that more people can take advantage of the drugs. And also, we're talking about because of the new development data, the cloud management has become much easier now to use data going forward, which is really key. And we're seeing an improvement. The one area that's killed us is, and I spent a lot of my career in the area of biotech in the Bay Area, a lot of time with Genentech. And in the past, medicines were held for a long period of time before the approval process through the FDA or the Food and Drug Administration. And now, thanks to technological advancements, government regulatory boards, we can now see it moving forward. If you think about a new drug at the very beginning, it cost about $5 billion to take that drug from the very beginning all the way to the point where it's made available on the shelf. And it could take 7 to 10 years. The process is too long and the cost is too extensive. So these things really have to be focused on to drive the price down. And again, immunity is one of the growing areas of biotech branching out into different areas. Again, failure to address these areas could bring devastating results across our country as it relates to epidemics, as we're now seeing with the pandemic. So one of the things I like to look at now is the retail sector. So, with a growing percentage of US population being vaccinated, and Centers for Disease Control is saying that, that those with shots don't need to wear masks in many situations. There's a bright light at the end of the tunnel for the retail market. But there are challenges ahead for the consumer behavior as it shifted over the past year. And many of these habits learned will be here and will continue as the lockdown remains from what transpired in the past. So we're going to see a lot of new ways of doing business. Consumers are looking for great shared experiences to socialize and check out what they call cool trends. First, retailers and brands need to confront the fact that your customers are savvy and fully digital. So you need to at least catch up digitally and transform your company and your supply chain. You look at companies like Sears, et cetera, that's why they perished, because they couldn't go to the next level. And that's going to continue. And then, first of all, you look at the merchants and the brands need to be prepared to be more disruptions going forward and another potential crisis. So retailers must be agile and resilient going forward. The second half of the year, we're going to see an extreme jump in consumer spending. You're going to see the increase in products and services, as well as travel and entertainment. So this is good news. But again, it all relates to the vaccine issue. Travel, as I mentioned earlier, is a key thing. A lot of this is being done online now, and people want a quick return and they want a good price for what they want to do. So that's not going to change going forward. The digital brands can reduce friction with conversions. Two easy ways. One is competitive free shopping offers. If you have Prime with Amazon and most of their products are sold, you can get it quickly. You don't have to pay a fee. You pay that one annual fee, but you get the product much quicker. And people want the ability to conveniently return a product. And that's been a problem with buying online. We've seen that all along. Here's what's interesting. Economists see that in 2021, consumer optimism outlook rose 76% for people, and they're looking to purchase, but they want to purchase from stores or brands that they trust, rather than going out and doing experimentation unless they can go to a store and see it physically. So once online, clearly, people want to get back into the stores. They want to walk around. They want to kick the tires. They want to try things on. So you'll see more of that coming back as the economy opens up and we can move forward. Keep in mind now, digital is here to stay. It's amazing how much time is spent. If you can imagine, the average consumer may spend 4 hours and 15 minutes on a mobile device looking to buy products every single day. People are buying on mobile phones now. It's blossoming. It's unbelievable. You see something, you want it, you buy it immediately. If it doesn't work, hopefully you can send it back. But the consumers are more than waiting to do everything they can by phones now. They want to move in a hurry. They don't want to go home, get on the phone, or go to their laptop or to their desktops. The supply chain, as I said earlier, it's been rattled. The overheated demand and logical hurdle will still remain very strong in the country. The demand is unparalleled. If you look at the docks in Long Beach and in San Pedro, they're still way behind in unloading containers off the ships. And that's been a problem, and it'll be a problem for the time being until we can get that out of the way. And again, the second part of the year, retailers must be prepared to continue to deal with uncertainty going forward. The COVID pandemic thing has really hampered things in terms of people going back to work and hiring at the docks especially. Another key is the capacity and constraints for costs. The cost of retail is going up because of the fact that people want quick delivery and they want to be able to return products. So that's driving cost up as well. I can't tell you, last Christmas, huge percentage of products that were bought online were returned and they had to be restocked. In some cases, companies will charge restocking charges. And again, as I said earlier, speed is essential. The losers that can't respond to customers in a timely fashion will be left behind. Keep in mind, Amazon continues to set the bar for delivery, and research shows that fast, free shipping and convenience, not necessarily price and selection, are the drivers of Amazon's success. Look around your neighborhood. Every day you see Amazon trucks up and down the streets delivering things continually. So they've got the right model. Getting back to inflation, as I said earlier, we talked about inflation. It's higher than it has been in 13 years. The index is up. You know, the represents a basket including food and energy, groceries, house costs, and sales in general rose over 5%. And there's a real concern here. Hopefully, when we get together in July, we're not going to see another 5 or 6%. I mean, that would not be good at all. This is becoming to be, as it stands right now, if it continues, this could be the worst we've seen since the Great Depression. Now, trade exports rose to $205 billion in the month, which is good. We're seeing that continue. This is in the month of March, over the month of March. So this is good news. The trade deficit, we have good news here. It was down to $69 billion, down from 74. So that's a good trend. We need to continue that up to get to basically level the playing field. Retail sales were down 1.3%. We've seen the shifting here. You know, people were buying a lot of large types of ticketed items, cars and appliances and furniture. We're now seeing a shift right now going to where people want to go out and they want to eat outside. They want to get back with family and friends. They want to start traveling. They want to do recreation. So there's a shift in spending going on right now. Now, I'd like to take a look at the U.S. employment picture for the month. Payrolls increased by almost 600,000 in May, which is good news, and the unemployment rate dropped down to 5.8%. But there's still 7.6 million fewer people working since the pandemic that have to go back to work. If you look at the chart, the real thing I want to look at is leisure and hospitality. That was the hardest hit sector in the economy, and we saw an increase of 292,000 jobs. And of course, if you look again, one of the key areas is manufacturing, which is really critical. So those are two areas where we saw growth. And keep in mind that it was reported last month that there were 9.3 million job openings in May. And again, there's a lot of issues with people that have skills to be able to take those jobs for the jobs that they lost from before. So it's a major item. Now let's take a look at the California economy and the hiring. So California payroll increased by 104,500 jobs. The unemployment rate dropped down to 7.9%, which is good, 0.4 of a point, which is great in April. Again, look at leisure and hospitality. That's where we see the major part of the growth. So that's the key, people going back to work in those areas. And it's going to take time for that to fully recover. Now, taking a look, for example, at interest rates, as I mentioned earlier, the Federal Reserve met the other day and they've decided the whole thing's the same. They're going to continue their monthly purchase of Treasury securities and mortgage-backed securities. That's 80 billion and 40 billion, generating more respectively, and keep continuing to insert cash into the economy to keep it rolling along. So we're going to wait and see what takes place when they meet again late July or August to see if there's any changes going forward. For those of you that were looking to refinance, on average, the cost of the 30-year fixed loan, just the average loan, increased to 3.25% from the 3% we saw in April. So rates for that particular area are going up. So that's the beginning now. So again, we've got a strong housing market. As I mentioned earlier, because of the cost of metals and lumber, the average new unit being built today in this country is going to cost about $36,000 because of this increase in these costs. Manufacturing index of good news, it's up to 61.2. Several months ago, it was below 50, which said we were heading into a recession or in a recession. So manufacturing is strong and it's getting better. So this is great news. If we look at factory orders, they fell more than expected in April because of primarily the global semiconductor shortage weighed in on production of motor vehicles and electronic equipment, appliances and components. So there's a dealer here, in a Subaru dealer in Carlsbad. What's interesting is the service manager was telling me this time of the year, they normally have 300 cars in the parking lot. They have less than 50 cars for sale. And some of his colleagues in other areas have run out of new cars to sell. And that's because they can't get the chips to the plants. So a lot of the plants have been closed and are going to stay closed until they can get an insertion of chips. And, you know, the country is trying to do everything they can to remedy that situation, but it's going to take time. You know, keep in mind that manufacturing accounts for just under 12% of our economy. and it's been shifted the demand right now to services. So we'll see what happens. Uh, so now if we look at small business confidence level, the interesting thing here is that the US confidence level edged a little bit lower last month. It declined for 4 months as the nation's labor shortage occurred, and inflation worries are on everybody's mind. So there's some real concerns. It fell below the 100 basis points in 99. The one thing I failed to mention is that new factory orders fell more than expected in April. Again, dealing with a global situation with supply and demand. Small business confidence level dropped below, as I said earlier, and that's based upon the COVID. Consumer confidence rose sharply last month. It rose to 117. A few months ago, we were below 100. So there's a lot of confidence in what we're doing. I mentioned the price of West Texas crude oil. The last time we looked, on last Friday, it dropped down to, in May, to $62. Well, 2 days ago, it was at $73.11. And again, it spiked. Part of this is because of the demand for more and more oil, and production levels have not increased. So that's a big concern. New home sales in Southern California, they skyrocketed last month on average to 24.7%. And this is another example of a hot market in California. So if we look at home sales in Southern California continue to rise, Los Angeles County, for those of you who live in LA, the median price of the home rose 25% to $775,000, Bill. And sales for the month were up 117%. Unheard of. You look at Orange County, the median rose 19.3% to 895,000, and sales were up by 113%. And then finally in San Diego, where I live, the median went up 22.9% to 725, and we saw sales up by 81.7%. Keep in mind, we don't have a lot of inventory out there, and it's hard to tell when that inventory levels are going to change. Existing home sales dropped by 2.7% during the month, and but they're still 87% higher than they were a year ago. As you know, productivity comes out quarterly. I'm hoping that in July we'll have information on that, so we'll see where that is. The good news is in company displacements, we only had one company called General Mills, and they had layoffs of about 1,300 employees covering the United States and Canada. So let's take a quick look at mergers and acquisitions. If you look at the hedge fund, Global Capital is acquiring Tribune Publishing. You're seeing more and more consolidation in the news media. And so basically they now own 70 dailies across the country. They're going to continue to buy up other newspapers around the country. Then we have a company called Blackstone is buying the data center operator QTS Realty Trust for $6.7 billion. And basically what they're going to do is they're going to take that, once it's done, they'll take the company private. They have 28 space locations around the United States. Amazon is buying a company called MGM Studios for almost $9 billion. Again, the situation is that Amazon, this is their biggest acquisition since they bought Whole Foods in 2017 for $13.7 billion. And what they're doing is they're further expanding their market share with what they have, their Prime Video service, to compete with Netflix and Disney and other streaming video services. So look for more acquisitions in this particular market by Amazon going forward. Then we have a company called Lightspeed Digital Commerce Company, ECW and New Order. These are commerce type of platforms are being acquired to expand capabilities and create standalone businesses. So we'll see this taking place over the next couple of months. In the biotech space, private equity group has reached a deal to buy a company called Medline. Medline is the deal is worth $30 billion, and it's a medical supply organization, which is one of the largest buyouts in the biotech industry ever recorded. So you're seeing, again, more consolidations taking place. So what else is happening in the marketplace? Well, I mentioned earlier, exorbitant lumber, scarce materials are hampering U.S. building. Home builders, right now, the rebound is less than expected in May because of the very expensive shortage of lumber and shortages of other kinds of materials. There's a lot of speculation that we may see a slowdown in that particular area of the economy. So that's a real problem. Now, Walmart is getting together. They're putting together a marriage with a Gap to create a whole new line of products to take to the market, to create a home goods brand and provide more to their clientele. So that's a chance to give Gap an opportunity to kind of grow. Gap has struggled over the last several years. Anybody use the post office? Well, guess what? I mentioned earlier in the year, the post office is struggling. Rates are going up for first class from 55 to 58 cents a stamp. Unbelievable. And what's happening here, they're trying to deal with the problem over the next 10 years. Their plan calls for trying to eliminate a $160 billion problem. So good luck. They're also talking about making some changes in delivery cycles, like maybe extending out first class mail for another day, maybe closing post offices on Saturdays. We'll see where this goes. Intel reiterates the chip supply shortages could be for several years. This is not good news. Intel said it could be several years for the global shortage of semiconductors to be resolved, the problem that shuttered the automobile industry and could have a major effect on consumer electronics, your cell phone, anything you want to buy, a refrigerator. There's a big concern there. But while the industry is taking steps, the constraints are still there. It could take a couple of years to get the ecosystem going again. Keep in mind, I mentioned earlier that Intel is building 2 new plants in Arizona, investing maybe $20 billion. Hard to tell when those plants will come online for chips. Now, one thing that's interesting is Staples, again, for the third time, has made a move to try to buy Office Depot. And it's a $1 billion deal. The thing that'll be interesting is to see whether or not it'll be rejected by the government because of, antitrust type of situation. If that happens, where else are you going to buy your supplies? At Amazon or maybe at Walmart? So you're finding fewer and fewer places to buy supplies that you need either for your office or for your home. Wells Fargo continues to close branches. They're closing another 19. And essentially, they've closed over 329 branches of their 5,200. They're trying to cut costs by $10 billion. So that kind of takes us where we are. What I'd like to do now is have Bruce is going to take a few minutes to chat about getting back